Good day. This is the Elliott Wave weekly update for the NASDAQ 100 being recorded on Saturday, September the 7th, 2024. I'm going to start with the cash market, the NDX, and I am out on the 3-year weekly chart. I just want to do a quick review of where we've come from and what is still now likely in progress. So again, we are on the largest scale that I'm showing, finishing or working through a primary fifth wave up. Primary wave 5 will consist of 5 waves of intermediate degree, of which 1 and 2 are complete, and we're still working through intermediate wave 3, which is to the upside. Within intermediate wave 3, we are looking and tracking the progress of a minor fourth wave, right? There'll be 5 waves of minor degree within intermediate wave 3, of which 1, 2, and 3 are complete. 3 being finished up at the latest high, the all-time high, at 20,691. That's basis the cash market. From that level, we did do a quick ABC down, and I can drop this down pretty quick. But just before I do, let me just say what still remains in place. Remember, that's the color. So I try to color code what my fib lines are relating to. And this would be for the minor fourth wave, which is what is still in progress. And first of all, we have the area of the fourth wave of 1 lesser degree, which would be the minute 4. And that is Elliott let us all know and continue to teach that the fourth wave of 1 degree will find its terminus, its endpoint, within the price territory of the fourth wave of 1 lesser degree. So minor 1 lesser is minute. So that remains the area of support for minor wave 4. Now, previously, on the A wave down, as it's marked now, we did get close. We got within, we definitely were within the price territory of a minute wave 4, and basically closer to the low of that marker or the endpoint of that minute fourth wave than we were even to the middle. So we came down pretty close. And while this was 17,435, the actual fib retracement for 382 or 38% retracement was 17,254. So again, very close. And then also the bottom or the low of that move was 16,973. Now, let's go through and come down to the daily, and we're going to start to look at inside this move. So I'm going to open that up, bring it in a little bit. There is the minor 3. Here we have 1, 2, 3, 4, 5, A, B, C. So again, it stays within the factor that if we were looking for this to be the completion point, we needed to be able to count the B wave would not have been expected to go higher than 0.786. And it really was reaching those levels, which is why it can continue to hold in the manner of that it was, this was the endpoint of minor wave 4, and that we were in the beginning stages of a minor fifth wave up. Now, I'm going to continue this, but I am going to go over what the new alternate view would be. Now, carrying it forward as we are, there were several reasons why this got carried forward as is in terms of being still within the minor fourth wave. Previously, when I had marked this as minor wave 4, which it did fit and it reached all of the concluding factors, it got close to that support, it finished within the price territory of the fourth wave of 1 lesser degree, almost got to the 382, which is the most prominent or the most popular or the most common. And also it did equal in time factor that minute 4. Now, the other thing that just took it away from that was that when we start to use Fibonacci time fractals for how long these waves should go, and we're particularly looking at this fourth wave, and we make a comparison to, say, for example, minute wave 2, or even go further out, but mostly making that comparison between 2 and 4, because those are the 2 corrective waves within an impulse move. So if we look at it on that perspective, this fourth wave should really have taken longer. And so we left open the possibility or the probability that we were coming down and that's only completed wave A of minor 4, and that this could have been the B wave. Well, as it turns out, we had 1, 2, 3, and then this should have been under the previous, which would have concluded that we're in a minor 5th wave up, that this was 1, 2, 3, and this was the 4th wave. Well, that got smashed because the size of the 4th wave totally outdoes the size of the 2nd wave, which is a single bar. And so we'd have to mark this as wave 1, this is wave 2. So again, those two in comparison just blew it away. And this low is 18,400, and this high was 18,368. So that fact remains in. If I move the A up to here, then again, this would have been 4th wave and it overlaps. So the fact that it got that close just also told me, no, it's not a minute wave 4 with this minute wave 5 coming up on several levels. So I switched it. I went over to and relabeled it as ABC for the B wave, pointing that we're in a C wave down. Now, I'm going to add some fibs here, and this is how we're going to build that picture. So now what are we looking for? We're looking for what could this B wave do, or where can it start to come in? I don't need that one. I'm going to leave 618, 1, and 1.618. 2.618, I leave it up there just for the argument, because I think it would actually come too low. So I'm just going to finish this up, put the colors in correctly. So this would be a minute C wave, right? And so changing that so it all fits. There's the color, there's the color. So we're in the minute. Most common, C equals A. When we're comparing within an ABC structure, then most likely wave C will equal. In other words, it'll travel the same distance as wave A. That level is 16,683. And we're looking, okay, we come right in between. We come down, we actually are just below, well, not just, it's a little bit below the bottom of wave 4, the minute wave 4. But we could, this is just a fib. If it were to come down and stop at 16,975, 73, 70, up in there, then it is finishing at the terminus of the 4th wave of 1 lesser degree. And that would be perfectly acceptable, provided we can be able to count a clean 5 down to form wave C. All wave C really would be required to do from here is to put in an additional low below 17,435. And also do it within a clean 5 waves down. So we have some resistance here at 17,927. I'm going to round it up just slightly. And that could be a good stopping point for the 3rd wave. So in other words, we're working a C wave down. There's going to be 5 waves within wave C. That's always. Wave C's are always 5. Now, where could that be? Well, it kind of started off very kind of choppy, which kept that 4th wave engaged for quite a while. But it seems that now I'm going to bring this down so that we can continue to try to just really look at the internals. The internals are not very healthy. So what could it be? A diagonal C, maybe, which would suggest that waves 1, 2, 3, 4, and 5 will all be 3-wave structures. And it'll wedge. All right, diagonal suggests that it will wedge. But we can also look to and suggest that just wave 1 kind of diagonal into this low here. So if I label this 1 and I label this 2, and I also could put the 2 almost right there. But if you need to, you can put the 2 here or 2. You can see in the cash market, it's a little more difficult. So I'm going to bring it down. Let's take a look at it on the hourly chart. Here it is again. So we have 1, 2, 3, 4, 5, and that actually ends up being a 5. So you can see it gets a little sketchy on what actually took place. I can say 1, 2, 3, 4, 5 as a clean 5. This one got a little sketchy, but if you count it out, it doesn't really break any rules. 1, 2, 3, 4, except the 4 slightly overlaps, and then we get a 5. So different ways I look at this, folks, because there are so many things that interfere with the wave patterns now. And what I do is, what changes do I see that are occurring that affect the wave pattern itself? Not necessarily the overall structure in terms of, is this a wave 1 or is it a wave A, or what could this be? In that respect, I still can count inside here. This way, yeah, you're going to see the difficulty. And so we're confronting choice here. And so I don't want to make 3 the shortest, because we already know that that can't be. So we'll move it back out and look at that bar chart. And here it would not. So 1, 2, 3, 4, 5. And again, look and feel again, and maybe just by, we're skirting one area that may or may not really matter in this particular case. And so it's 1, 2, 3, 4, 5. Wave 1 of C. And I'm calling this wave 2 of C. And then we have 1, 2, 3, 4, 1, 2, 3, 4, probably one more, and that's going to be a low for wave 3. We get another 4, we get another 5 down. Now, I do feel that the market is changing in several ways. Let me go back out to my 4-hour chart where I can get more real estate in terms of the count, because we need to get down to there. And we're still, from this level, it's 1,000 points, 17,000, 18,000. So that's 421. And we're looking for it to come down to 743, 17,433. So basically 1,000 points, a little bit plus. Now, and if I'm counting that we're in 1, 2, and we're in the third, then I think the third is extending. And so there's still quite a bit more, and maybe wave 3 comes down this low, and then we get a 4, and then we get a wave 5 that'll bring us down to here. Now, here's the other thing. It might resemble that, right? So what also has happened last week in terms of, I just always discuss the capital flows, the money, that's the money flows, where it's moving from and to, and then also options flows, which really do control a lot more than we want to admit. I mean, I'm saying it, but I think there's a lot of people that just don't think that the options have that much of a pull or a say in the movement of an index, an ETF, or a stock. But it does. It really does. And that is just a product of how options trading has truly advanced, with the addition of all the 0 DTE options, with the addition of, there are, weekly expirations, quarterly expirations, monthly expirations, and then within the ETFs they have all the different things, and basically within the Qs and the spiders have an expiration similar to the SPX every day. Every day you've got an expiration, and that truly affects where things are going to trade and where things get pinned, because they're getting pinned to an expiration, to a particular strike price. And then we add into that we do have volatility plays, and volatility plays come in, and then that is where we really derive a lot of our gamma, those gamma flows, where we have a buildup of gamma at one strike price that could be below the market, and that gets called the put wall. And above the market, we call it the call wall. One is providing support, that would be the put side. The call side is resistance. When those break, it throws the market into a position where it must cover, it must adjust. Who must adjust? Well, dealers, traders, big institutional traders who may have put the position there for a particular reason, just for their, whatever they're doing. But nonetheless, that's where it sits. And coming off on Friday, actually started on Thursday, and then it went into also on Friday, we started to sink. And if you really kind of look, and again, if you're part of the trade room, in the trade room, I give those levels before the start of the day, our regular session. And on Friday, I gave those levels they had shifted them, but nonetheless, in the NASDAQ, it had already broken below. And so then it really got shoved, and we had a put wall in the cash market. Let me just double check as to where that was. And actually, I can't right now, but I believe it got broken. But it didn't get broken in the regular session for the NDX. It got broken in the extra hour that's given to the market after the close in the futures market. So what my thought process is here is that, like we did here and here, I believe we're going to gap lower on Monday. Because you see that the futures market closed at 18,000. Oh, let me just kind of open this up just slightly so I can get that whole number. 18,377 and some change. But it had a low of, I believe it was 18,000. Let me see if they still have it up there. NDX. The low for the NQ was 18,339, or let's just call it 18,340. Now, there is still a little bit hard to see, but there is still premium in the September future, which now has even less days, right? Because September expiration is coming up. I'll give you that date exactly. We have September expiration. So that was September the 20th is September expiration. So we're going to start to see probably next week and the week after where they're starting to roll those contracts. They're rolling the September contract. They're closing out September, moving it out to the next month. And so we're going to start to see that come in. So the premium starts to shrink in that September contract. But still, the number, they closed at 833. The cash market closed at, and I'm just going to go right there, closed at 18,421. Now, so 18,421, and the futures market closed at 18,377 with an 18,340 low. So they bought it up real fast, and I'm telling you, it was real fast. They bought it up in like less than 5 minutes, from 40 to 80. They took it up 50 points, and it just really was just like moving at a very fast clip. Now, how do I put this all together? So I think we're going to gap lower. So it depends on where the future will open and trade tomorrow. Okay, let's go with that part. But I think that what's coming out of this expiration is not going to be good. So I think that what also happened is the overall negative atmosphere, or the gamma atmosphere, has switched from positive to negative. And we started to see that here. We started to see it on the 3rd. So it was 3 days prior to that expiration. So we start to see it on Tuesday. Tuesday was pretty strong. So that's where, and then we had started to see pick up again. So we saw this risk off begin right after Labor Day on Tuesday. It was a pretty rough day. And then we had a little bounce on Wednesday and Thursday. And Thursday started again to see the reversal. Friday was it was a stronger down day. And it was another one where it's like, okay, risk off. Now it had to do with expiration. Now it's going to get interesting. And here's why. Because a lot of that negative gamma may have been associated with Friday's expiration. So it doesn't have to just necessarily occur here in the indexes, because you're going to pick it up in a lot of different places. Its greatest effect is, again, in the index, but we see it in the individual stocks as well. We saw it in stock, Google gave it up, Amazon gave it up, Tesla. We saw the whole monetization in Tesla on Friday, where they opened it at 233 and ran it up a little bit higher. And then suddenly, did you see where the stock finished, right? That's the big thing. Do we see where the stock finished? I just open this up because I get this whole thing where it just kind of tells me that I don't have enough room to get to the bottom of my list, my watch list. So Tesla closed at 210, almost 211, but it closed at 210. They bid it up after, of course, but 210 was the regular close in Tesla. So going from a 230 option down to 220, 210, that's $20. That's a lot of gamma. That's a lot of selling to kind of bring it all the way back down, because they bought it for 3 days prior. So they just monetized what they needed to and got out, and boom, stock fell. So how do we want to put this all together? I think that we have shifted into a negative gamma atmosphere. Doesn't mean that it's going to last, but I think it'll be similar to how it happened last time. And last time is right here. Now, if we get it in the same fashion, we're going to come down, we're going to spike low, right? That it's done, and then they suddenly start to move the market higher again. In this case, if we revert back to the Elliott, we get a C wave, we get that completion move in terms of, the sort of like the bottom just kind of falls out and we drop. And I think that can happen again. Now, keeping it in an Elliott view, we're just looking for that low on a minor fourth wave. I am not looking for a major drop lower right now. Now, doesn't mean it can't happen. So don't get me wrong, because there are a lot of people that are crash. It's going to crash. It's going to crash. September, October, they're always bad months for the market. Those always can tend to be adjusted. They're not guaranteed, particularly when we're in a totally different atmosphere that controls the trading. Algorithmically, that's number one. And also the fact that options trading, I don't feel are derivatives anymore. I think almost that the underlying is the derivative now, and the options trader are the leader. Because it definitely, because of the gamma, because of how things move, that's where produces the larger moves. When we start breaking levels, either to the upside or the downside. So it's a matter of the risk on trade, the risk off trade, and that's kind of across the board right now. Doesn't mean it can't change, because I believe it can. But right now, that is how things trade. So it's volatility versus putting risk on or taking risk off. Now, what can I say if I do believe we're coming down, we're finishing a third, we go up in a fourth, come down in a fifth. If it completes minor wave 4, then I'm looking for it to turn and to start to go up as strongly as it did here, but not peter out, just to keep on going, keep on going, keep on going. And once we get that fourth wave in, we get that C wave in, and the low of minor 4, then I will be able to connect fibs that'll show us how high we might come in a minor fifth wave. Now understand that I've been looking for this for a while, that we get a minor fifth wave up that completes intermediate wave 3, as I just discussed, with the overall pattern still in progress. Once intermediate wave 3 is complete, then we get an intermediate fourth wave. And then again, we'll come down to the price low, or the price within the price territory of the 1 degree less, which is from intermediate is the minor, which is we're finishing now. So this is going to go up and come back down, and goes up and comes back down to approximately the same area, plus or minus 100, 200 points, maybe more. And then we get an intermediate wave 5, again, up to new all-time highs. So what I thought maybe if that was minor 5, we could go. Now, let me just discuss briefly what an alternate count could be here. If we want to feel that this is the completion point for minor wave 4, and we are within a minor fifth wave up, then we're going to be counting minute waves, just like that would be, but we're going to start here. Minute 1, minute wave 2, and then we can kind of come up and likely minute 3, minute 4. It's not pretty, but it could be minute 5. And then what are we, excuse me, these are going to be minuets all the way up because this is going to be minute wave 1. Before, remember I said this was minute wave 1, minute wave 2, minute wave 3, 4, get off the boat. Not too, it's too big, it went too deep. But now let's look at it differently. Minuet 1, 2, 3, 4, 5. Minute wave 1, it could be a minute C wave. And therefore, we wouldn't be looking for it to come all the way down. If I had to look here, I'm going to put up a different set. These are for C of that larger minor 4. Let's take that off for just a moment. And now we're just going to put fibs. If this is 1, we can do some different ones. We're going to put retracements up there. And what do those retracements look like? Well, wave 2, we already know, 650, 618. Gee, let's take a look where it got to. 618, 18,421. We know it's going to come lower, so maybe we get to 782, 786, excuse me. And that's 17,971. So we get that little bit of gap lower. We come down here, we get there, and then suddenly it stops and they just start to blast it through the roof. That's the alternate then, right? That we have 1, 2, 3, 4, 5. And that could very well be. So what I'm also concluding here today now, what would be the preferred is that we go down and finish that minor fourth wave and then rally. The alternate says, well, we're still on track and we're inside that minor fifth wave up. So that's still minor 4, but here we got minute wave 1 and now we're looking to complete minute wave 2. We've got our markers. What wave 2 can't do is it cannot go below that low. If it does, then this is not a wave 1, correct? If we're looking at it as being a wave 1, wave 2 can't correct more than the 100%. Them's the rules. So what we have here, now don't get me wrong, because a wave 2 can put in an irregular B, but it just can't finish. We can't call the wave complete at a new low or high above or below wave 1. So now that's the alternate count, excuse me. Now, moving averages, well, you can see the 20 has crossed both the 50 and the 200. That supports additional downside. And we've got the 50 getting ready to cross the 200. That's going to throw this 4-hour chart. And let's just go up to the daily. I want to just double check that daily. What do we got? What do we look like? We got both the 13, which is not all that important, but it is. That has some weight, has broken the 50. The 20 is just about ready to do so. They are sitting together. 19,165. And this one is, let me move that out of the way. Come on. 19,173. So it actually is breaking it right now. Going into the close, the 20 was breaking the 50 on the daily. Negative. So if we gap, it's going to go. Then together, we got a 200 that's still pretty flat. So this area, again, becomes support. That's where we get both, right? We get that alternate view. If this stays flat and it comes down and holds and they go back up off of it, well, then we know what's going on. If it comes down and breaks right through it, then we're into that negative. And last time, folks, it gapped through it. It gapped through it. So that would be another big takeaway. If it comes down and it gaps through this, tomorrow or Monday, it gaps even further, right? So tomorrow, the future gaps again, and it keeps going. It's pretty much what we saw here. On this particular day in the futures market, we saw the NASDAQ future down almost over 1,000 before it started to recover. We may see the same thing again tomorrow. I don't know. We'll have to wait and see. All right, let's go over and take a look at the NASDAQ itself. The futures market itself. And again, we're just going to start here because we already went over. None of that has changed. So as it stands in the cash market, it also stands here in the futures market. But here we have wave 3, A of 4, B of 4, and I left that down there just to kind of leave it as a marker that where we get the minor 4, possibly all over down this low. Now, it does still fit pretty cleanly because here we have, you can see, look what we got. Now, on Friday afternoon, after the normal regular session close, the future slid and broke below that 200, the daily 200 moving average. And then just picked up some speed because that came in at 18,583. It got as low as 18,339. It was like, get out of the water, get out of the pool. The sharks are just eating anything in sight. And that's really what it was doing. Devouring any bid that may have existed. And it did almost at certain points, it free fell. So again, what's behind it? Well, we had SMCI, we had Tesla just kind of turned and run. We had Apple dropping from like 224 down to 220. We had, a lot of stocks, particularly we had Broadcom. Broadcom's earnings came out on Thursday. The market did not like them. So of course it just dropped. It just dropped. But then it really kind of held 142, 143. And then it was Friday that it just went plowy and it came all the way down. And ended up on the day, it finished up at, I can tell you, 136,995, but then it was quoted 136.50 to 136.59 on the finish for equity trading on Friday. So I do think that we may gap lower tomorrow, and it'll set the stage for some nasty move. And what may come in to kind of push that into play, yet to be seen. Now, let's just kind of go over some internals here. Again, that is minute wave A of minor wave 4. ABC, minute wave B of minor wave 4. Let me bring this down. Let's take a look at the hourly chart. Now we can look inside. This was pretty heavy duty. This was Tuesday. That's where it shifted from positive to negative. Then we have this. This was a reaction to employment numbers, employment data, and also the ISM. But actually, the ISM turned it lower. Excuse me. So it did this crazy move. Like, okay, wave 4, we're off in the right, we're off and running in the start of a fifth wave up. Excuse me. Let me just take a little sip of water here. Now, how do we want to look at all this? It's just not all, it's very disjointed. But what I tend to do, again, I go down and take a look at the line chart. The line chart takes all the fluff out of it. And so I get 1, 2, but this 2 is a little bit higher than this 2. So I may have to move this over now that I look at it in that respect. But if I take it out of this style and I put it back on the bar, we see, get out of here. I see that this is higher than that. But on a closed basis, this is higher. But that does not really look very productive in terms of it looks like 3. which is why I left this as 1, 2. Here was 1, 2, 1, 2. And then 1, 2, 3, 4, 5. Done, maybe. But we got these quick rallies and absolute devastating drops. Again, these are the numbers from Friday. They had the U.S. unemployment report. And they decided that was it. Now, that doesn't mean that the Fed's not going to cut or start to ease on their next meeting, which is in 2 weeks. So they may, but let's put it in perspective. Everybody wants to run away with going like, lower rates, good for the market. Not this time. And not always. Let me just restate that. Not always. It is something that the narrative was put out there. Time for them to really just start to lower rates. We need to ease up. We need better home sales. We need this. We need that. And it's like, market, you don't need anything other. You can't demand. But again, now the Fed is truly expected to lower at the September meeting. So the question is, are they going to lower 25 basis points? They're going to lower maybe 50 basis points. But there's a third now creeping around the narrative. And the third one is they do nothing. They do nothing. The unemployment rate maybe is not going to really match what they think they should see before they start releasing interest rates and start bringing them down. So then we make it number 3. Now, if number 3 comes up and the market's absolutely demanding and expecting and they don't get it, what do you think is going to happen? Could be pretty nasty coming up. So I don't know. But we're only looking for this minor 4. And we do have, let me go back out to the 4-hour chart. We do have, here's what we got for where minor 4 can kind of come in. That again, or just a completion point for minute C and then minor 4. We have that down where C would be equal to wave A is 16,392. Well, where is 50% retracement? 16,389. Wow, do they match? Yes. So it becomes a very high candidate to finish this downside and put a minor 4 underneath it. Do I have more underneath it? I do. If we get the full blowout, it still can be a minor 4. And I would let me just add one more level here. Let me add 618. So it would be below that. We don't want to get too far because, again, we do have, and it's pretty far down there, but then 4 just really starts to look out of line with the balance. There's the wave 1. But if we're going to start coming down here, then, yes, we can break minute 1. We're not in that type of a decline. So it could, but we're starting to now that the minor 4 is really out of line with minor 1 and even intermediate. Minor 2 and then even intermediate wave 2. So it puts a lot of things out of perspective, let's say, and really you begin to question like, well, what was all of this if they start to really come down? Yes, I do have some suggestions, but it really would involve going way back and rerouting all of this. And this can no longer, it just truly cannot be a B wave because it just exceeded all possibilities. But there are possibilities that we could go inside here and start to reroute this 5th wave. What does it suggest? So I'm not at a point where that's going to be part of the discussion because I think there's just too much. And then we have a lot of people that come in and watch and listen, and I just don't want misinterpretation. So right now I'm keeping it that it's a minor 4, and the possibility that minor 4 could come down even further does exist. But right now I am really looking at the possibilities that this is how far we get. Open this up down to here. And it would be perfect. Again, whatever can be perfect, right? When we're talking about the market. But you get the A, the B, and the C comes down into here. We finish it. We start to rally. That would also produce, now this would just really accelerate that negative gamma. Now, when it stopped here, that really wasn't the expectation. The expectation that the market would just continue to tumble a little bit further existed. Well, now that we're back into that, and I think the risk on was not as strong as the risk off. And the risk off may just really carry this thing right on through. First of all, we've been looking for it to carry us through and to a new low below what we had, which is 17,351. Here, we're looking for it to get below that one for sure, but we have our first one at 17,335, which is just below. So I'm not looking, I'm looking for more than that, but it could, but that just kind of puts the C almost, I don't like it. So I'm looking for it to come down, but at least below this low, which it already has, but below this low and closer to here. This is where it's lining up for me. But still, we're talking about this thing closed at 18,377, 16,392. Again, we're looking at 2,000 points. We had in the cash market 1,000. Here 2,000. So yeah, is that possible? I think so. And a lot of people are going to call that a crash. I just call it a steep decline. And C waves. C waves can be powerful, particularly when they're in this direction. It can be very powerful. You get a lot of reversing of positions are going to happen. If this really goes down quick, we're going to go through level after level after level where they have no choice. And if they do it fast, that means somebody even bigger is doing the pushing. So trading opportunities, plenty. But position traders and everybody else, it's like, take heed to what's happening. Protect, protect, protect. Yeah. And that's about all I'm going to say because I do not make trade recommendations, no way, no how. But if you have positions on which are favoring upside, and you're in stocks, for example, that may just kind of lose all the froth that's just put into it. So before they get that froth back, we may go down. You want to check on these individual stocks. You might want to send me an email. Let's work something out because I actually do analysis on Apple, on Google, on Amazon, on Meta, Microsoft, on Tesla, on NVIDIA, and et cetera. So, you know, and then of course there's SMH, which is just going to go through the floor. So we've already building up to where we're seeing this. And, you know, there are ways to trade and to protect against those types of declines. And again, getting back to the NASDAQ, drop me an email if you want more information on any additional analysis. Michael at MJF, the number one partners.com. So back to here. I do think we have continued downside. Here are our support levels. Now, this would be for the Minuet Wave 3. This is kind of, in my mind, likely. If I'm coming in here going like 1, 2, we're still inside that third, we could drop. On the C wave, 618, 17,780, that's not where I'm looking for it to stop, but I do think it will present an opportunity where we might pause. So maybe we get the initial follow through, we come down to here, and that's wave 3. We go up into wave 4 and we come back down. Now, wave 3, this is all wave 3. We get a full blowout on tomorrow and Monday. Then we have the opportunity, we're going to come down to 17,335. That again is just the measurement for Minuet Wave 3. My guess is somewhere in between here. For 3, we get a 4, and the 5 could be the killer. The 5 can be nasty. If the 3 comes down to here, we get a smaller 4, then the 5 down into here. So again, minute degree. So I'm looking pretty strongly. I think we should get down there. Definitely below 17,351. Go back out to the daily and take a look at these moving averages on the futures market. Here again, there's the 200. There was the break. That came on Friday after the close. And then here we have it. So there's the 50. The 20 is now below the 50. The daily 20 in the futures market below the 50. We're expecting the same thing to happen in the cash market. The 13 is running the front of the end of this. The 200 still remains pretty flat, but we've already seen prices break it and close below it. Continuation is going to turn this, and these will be playing catch up. If and when they all drop below that 200, this could turn into a slaughter. Because then the market is just in tune to really start to break down. Now it broke here, but you saw it went down, and you saw here's 1 day, 2 day, on the third day, and the second day it came above but closed below. And the third day it came above and closed below, but on the fourth day of that, it just came and closed above. That was the big signal. That was a big signal. Now we see it close below. I'm looking for follow through. We'll see what happens. When it reaches the bottom, if it comes back up and comes back down, then it's still in a down. It just depends on where things close. So we would need to see a push above and a close above the 200 to give us enough information to say, okay, we may have reached the low, but we're not there yet. Okay, that's going to be it for today. And the next Elliott Wave Daily update will come through on September the 9th, on Monday, September the 9th. And have a great balance of the weekend. And I will talk with everybody on Monday.